This is the Mooncast. Hey bro, I'm just trolling is something that will not just challenge your perspective, but also touch your heart and soul. It's a book that defies convention, blending art and literature into a thought-provoking masterpiece. A reflective piece of provocative art that tackles societal constructs from angles you've never considered. Hey bro, I'm just trolling delves into the very essence of our existence. It questions the technology that surrounds us, challenges our notions of beauty, stares unflinchingly into the eyes of death, and questions the boundaries of freedom. It scrutinized the educational system that molds our very future. This book is a journey, an exploration of shared human experience, and it's a work of art that refuses to be confined by tradition. It's a canvas painted with words, a melody of thought, and a testament to the power of creativity in a world dominated by algorithms and data. Visit moonboycapitalventures.com and get your hands on Hey Bro, I'm Just Trolling today. It's not just a book, it's a movement. Now let's jump back into the show.
Welcome to the Mooncast. So we have a bunch of news to cover, and we're going to start with Microsoft, right? So Microsoft crypto plans are being leaked. In regards to these leaked documents, reveal that Microsoft plans for an Xbox crypto wallet, right? And so this article goes on to read, it says the tech behemoth Microsoft is inadvertently revealed its plan to integrate a crypto wallet with the popular Xbox gaming console. Leaked internal documents posted on the Restera Gaming forum last week show, right? And it continues on, it says, according to a report from The Verge, unredacted documents in the Federal Trade Commission's FTC case against Microsoft, where the regulator is attempting to block the company's $69 billion purchase of Activision Blizzard, included communications between Xbox executives that details plans for a new diskless Xbox Series X, a gyro controller, and a next-gen hybrid Xbox to be released in 2028. This is going to be super interesting, right? So it goes on to read, it says also included in the documents was an Xbox roadmap from May 2022, the detailed plans to integrate a cryptocurrency wallet into the next version of the console. The leak has been called the biggest in Xbox history because unredacted emails like this don't usually appear in the public domain. Xbox chief Phil Spencer emailed Microsoft employees about the leak last Tuesday, saying the plans were unintentionally disclosed as part of the FTC versus Microsoft case. I know this is disappointing, even if many of the documents are well over a year old. Our plans have evolved, Spencer said. I also know we all take the confidentiality of our plans and our partners' information very seriously. This leak obviously is not us living up to that expectation, right? So Spencer also addressed the leak on X, formerly Twitter, saying we've seen the conversation around old emails and documents. It is hard to see our team's work shared in this way because so much has changed and there's so much to be expected about the right now and in the future. We will share the real plans when we are ready. Digital assets and gaming have always been closely tied in concept. Michael Silsberg, head of investor relations at AltTab Capital, right? This isn't just about this one niche of the game ecosystem either. Across the gaming industry, in game microtransactions account for nearly all revenue of global revenue, right? And Microsoft's inclusion of cross-chain wallets in Xbox will allow the next generation of the game developers to enable players to create, retain value from in-game worlds, facilitating actual digital asset ownership, decentralized player-driven markets, and reduce fraud in digital economies, right? Integrating crypto can disrupt and supercharge the 76 billion in game microtransaction market. He added, opening the gaming digital marketplace to crypto assets has the potential to increase the number of participants by 2.5 billion gamers in digital assets market, which will only increase the number of transactions but strengthen the position of digital assets in the global market. While the leak made the plans more official in the eyes of the public, rumors have been circulating for years that Microsoft and its competitors like Apple, Amazon, Facebook, and Google were planning to add support for cryptocurrencies in the future as blockchain technology adoption continues to grow. The heavy-handed effort by regulators in the US to squash Facebook's plans to launch its own stablecoin in 2019 on the onset of a crypto winter following the bull run of 2021 have put many of those plans on the back burner. However, the recent flurry of spot Bitcoin ETF applications by some of the world's largest asset managers to go along with the banks like JP Morgan and Citi announcing plans to launch blockchain-based deposit tokens have reignited interest in the asset class. Based on this and other recent developments, it wouldn't be surprising to see an official announcement from Microsoft and Xbox regarding future plans to integrate a crypto wallet with their software. Microsoft is rumored to be working on integrating a non-custodial Ethereum wallet into its Edge browser, but details on that development, including a potential release date, are scarce. Right? So this article, before we continue with the article, I just want to say a couple of things, right? So Microsoft, as you guys know, owns Xbox, right? And yeah, it just made sense because, again, there's this huge gaming narrative that's going on in crypto, and it just makes absolute sense to have already a Web 2 game that people play a lot and to then slowly integrate then Web 3 applications to slowly then onboard the users that are already in the gaming sphere, instead of doing it the other way around where you have a Web3 gaming product and you're trying to get the Web2 gamers to come on into Web3. It doesn't make sense, because why would they try to get all the technical know-how to know all the different nuances in regards to getting onboarded into the cryptocurrency Web3 space to then be able to play a game? Most gamers don't really care about the actual profit itself. It's nice to have. I'm not saying no one doesn't like to make money, but they're more interested is if the game is fun for them. And that's the reason that people buy games, is the game is fun. So if there's a lot of technical barriers to entry to be able to play games, then gamers would be less prone to want to play it. So it makes more sense to make the technical barrier to entry very, very minute by just not changing anything within the gaming format, but just integrating optionality and options. For instance, as an example would be, okay, say for instance, I have a video game character and I level him up all the way to level 70 or 80 or whatever. And now that I've beaten the game or whatever, I could never sell that character to at least get some money as a reciprocating effect for the amount of hours that I put in to play within that game. But now you would be able to have maybe the option to do that if you were able to mint that game character as an NFT, and you could then sell that on a marketplace for other people who maybe want to already have a higher level character and don't want to go through all of the journey of building up the character and leveling him up, and can just pay, I don't know, $5,000, $10,000, $2,000, $1,000, whatever the amount for that particular character that someone else already put in the effort and the time to build up. So it just makes a lot more sense in the long term for a gamer to have that optionality. But if you did it in reciprocating effect, or in a way in which you had a Web3 game, and the Web3 game was supposed to try to onboard as many users as possible and get all the technical know-how of getting a wallet and, you know, storing your seed phrase correctly, and what if they lost their seed phrase, and then getting them to play the game, it would be much harder. So I think it's better to have the optionality within the platform of the actual game itself that people are already playing, or the gaming consoles that people already use, and to already have an option to, oh, you can also get a crypto wallet, and then it gives people, sparks more interest into other people to want to do that. And then the people who start doing that then will start self-promoting it, maybe on social media, and saying like, hey, look, I've made, X amount of money on this game from building up these characters and selling them, and so on and so forth. Then other people start getting involved, and then it creates a snowball effect, right? And slowly but surely, it's able to seamlessly onboard the users and streamline that process better, as opposed to trying to build out a Web3 game and then trying to get the users from the Web2 space. So that's what I would say about that. Microsoft has been getting a lot into crypto. This isn't anything surprising for me, because if you look at the landscape of what Microsoft is doing, they also partnered with Aptos, which is a layer one blockchain, right? Smart contract blockchain. And so to create this sort of synergy between in the Web3 space, and I'm not entirely sure what they plan to build, but it's something in combination with AI and Web3. But they did partner with them. So I think they're moving forward. They're just going to continue to slowly sort of integrate these sort of blockchain type solutions and make more strategic alliances and strategic partnerships within the entire Web3 space. But anyways, let's continue on with this article. It goes on to say, talks about in February, the company partnered with Anchor. And so yeah, again, it's a decentralized blockchain infrastructure provider to provide a novel node hosting service on the Microsoft Azure marketplace in order to support enterprises and organizations that need access to the blockchain data. What does that mean? That means Anchor is basically a blockchain as a service sort of provider, right? And so anyone who wants to build a blockchain, they can go to Anchor, and Anchor will leverage then the Microsoft Azure cloud service provider to be able to host the blockchain nodes and things of this nature on their platform. And that's basically the service that Anchor provides. And so Microsoft is trying to sort of be a little bit more competitive in the cloud service provider space. As you guys know, majority of the market share is held by Amazon. I think Microsoft controls around 20% to 25% of the market share, and then the rest of the majority is owned by Amazon with AWS, right? So trying to be more competitive, in a way for them to do that, and is to get more aggressive in regards to Web3, so they can basically control this market as opposed to trying to compete with with Amazon and AWS in the Web2 space, because they're losing that battle currently right now. And also, if you guys don't know, they did just drop a course on cloud security for cybersecurity specialists, or people that try to become cybersecurity specialists, because they're trying to expand their cloud service provision. And with that comes, as a subsequent effect, more cybersecurity analysts will be needed to protect their cloud, right? And so because a lot of the universities and things of this nature are failing in regards to teaching the students the correct pieces of information that you need to know to be able to then have the adequate skill set to then facilitate that to help Microsoft and their particular company, they've just went ahead and took the initiative to build out their own course with their own particular niche skill set that's needed to be able to command the Azure, right? The Microsoft Azure, which is very interesting. I will be taking this course too as well. Just to let you guys know, I'm currently right now taking the Google cybersecurity course, and then after that I will take the Microsoft Azure. But just interesting news for you to know. The article goes on to read, it says through the collaboration, developers are able to develop on Anchor's RPCs and middleware platform for decentralized dApps, and use Microsoft's cloud platform to meet their scaling and needs. RPC nodes, such as those offered by Anchor, allow decentralized applications to link blockchains and access user data, right? And so basically, again, the RPC nodes is just basically the link, again, between so basically it's sort of like how you're able to interact with the smart contracts, right? You need some kind of bridge, and this RPC node provides that bridge for that. And so it continues on to read, says, for this reason, they serve as a critical piece of infrastructure for the blockchain sector, right? It says in August, Microsoft partnered with Aptos Labs, which again, when I just went on and talked about just a few minutes ago, it says this firm behind the development of products and applications on the layer one blockchain networks. Aptos with the goal of accelerating global Web3 adoption using Microsoft Azure Open AI service through the creation of artificial intelligence chatbot dubbed Aptos Assistant. So it is, again, like I said, some kind of AI integration in regards to what they're trying to do, but they are also using Web3. And so Aptos Labs created the Aptos Assistant to help simplify the process of onboarding new users in the Web3 ecosystem, including creating wallets to complete the onboarding process, converting fiat currency to cryptocurrency, and understanding how blockchain and decentralization benefit user personally, right? And so Aptos Assistant will enable users to seamlessly onboard into Web3 by asking any kind of question regarding Aptos blockchain ecosystem using natural language. The companies said it will also be able to guide developers as they build smart contracts and decentralized apps and direct them toward relevant, accessible resources. It's actually really good because, as you guys know, there's been a lot of smart contract exploits. And so if you're able to streamline that process by creating a training module backed by OpenAI, and you're able to leverage that to be able to make sure that the smart contracts are being deployed on top of the Aptos ecosystem are secure and safe and reliable, then you're going to be able to have a more robust blockchain as a reciprocating effect over that course of time, right? As the network effect continues to build out. And so, yeah, it's a very strategic move by Aptos and by Microsoft for Microsoft to dibble and dabble into the Web3 space by leveraging their resources in regards to the OpenAI software and the services they can provide. And then it's also good for Aptos because Aptos is able to maybe streamline the process to make it more easier and efficient for dApp developers to be able to build more easily, right? And so this is basically the Microsoft news that I want to cover. So let's go on and move on to the next piece of news. So moving on, we have monthly stolen NFT value declining alongside traders and volume, right? So when we look at this, we can take a quick take. So it says less value is being thieved from NFT sector month over month, according to PeckShield. Most stolen NFTs are quickly sold on Blur, the leading NFT marketplace by volume, right? Apparently it's Blur, it's not OpenSea. I need to double check that to see if that's correct. And the article goes on to read, it says NFT volumes, trades, and unique traders are all in a downtrend, right? The value of the stolen non-fundable token shrank in July, retrieved relative to the month prior, right? Continuing a downtrend that correlates to a general decline in NFT interest market-wide. According to blockchain security company PeckShield, roughly 1.73 million of NFTs were stolen last month, right? A 31% decrease from June and 89% decrease from the 16.2 million stolen in February. Additionally, PeckShield noted that half of all NFTs stolen were sold within 165 minutes. Primarily on Blur, the leading Ethereum NFT marketplace by monthly volume. Crazy. So Blur has passed OpenSea in regards to trading volume. So I'm not sure because, guys, I haven't been paying attention so much to NFTs or so much in this space to pay attention to, but I am going to look into Blur and see basically why it's surpassing OpenSea, what products or services are they differentiating in regards to being more competitive within the marketplace as opposed to what OpenSea is offering. But as you can see here, this chart reads basically the marketplace monthly volume on a month-to-month basis since September 2022 all the way to September 2023. And you can just see that OpenSea basically had a stranglehold on the market in September and in October. And then Blur's trading volume started to creep up in November 2022. And then they were almost at basically an equilibrium. So not really an equilibrium, actually. Blur then surpassed OpenSea as of December 2022. So this is important information to know because who controls the NFT marketplace is going to be able, that's where you want to be launching your NFTs, you know? So if Blur is basically the market leader now, that's the main point of focus where you would want to launch your NFTs on Ethereum, right? As opposed to launching them on, you don't have to launch it on Ethereum layer 1, you can launch it on Ethereum layer 2 as well. But I got to see Blur if they have the possibility to launch on NFTs on Polygon, for instance, because I'm not entirely sure exactly how Blur works and how far they are in regards to progress with that. And I don't know how much cross-chain capabilities they have, or is it just only Ethereum that they deal with mainly, or are they going cross-chain? Are they doing Solana? Are they also doing like BNB and so on and so forth, right? So when we look at this, so by February 2023, Blur had $1.1 billion in NFT trading volume, whereas OpenSea only had 499 million, right? Important news to take care of and just really understand basically how the NFT landscape is changing so much. And it happened also as well in Cardano, because I remember in Cardano, the NFT leading marketplace at one point during the bull run was CNFT. I think it was CNNFT, right? It was CNFT, if I'm not mistaken, right? And then JPEG Store came and just destroyed them, So it's very important to keep in mind that things can change in regards to leading NFT marketplaces based off of the value proposition and the competitive advantage they have. But when you go on and you continue to read on this article, it says the decline in monthly stolen NFT values correlates in general decrease in NFT trading volumes, which declined more than 17% over month in July. According to the Blocks data dashboard, monthly trades and monthly unique traders on Ethereum NFT marketplaces have also been steadily trending downward, indicative of declining interest in crypto sector, right? Exactly. So that's what I would say too as well, is that this is just a direct correlation to the entire landscape of crypto right now. I think most people are moving most of their money into Bitcoin. There's also the Bitcoin ETFs is coming on shortly too as well, that will possibly more than likely get approved, seeing as Congress is kind of pressing the SEC to get them approved and to stop delaying them. But we'll see how this continues to play out. But I do believe they'll probably get approved sometime before the Bitcoin halving. This is just my assumption. And in previous halvings, the Bitcoin price did crash right after the halving, but then it then went up to start the bull run and pass its previous all-time high from the previous bull run, and then continue on pumping. But what I would suggest to do is just to continue to accumulate within this range right now, because it's not certain, and it's a huge opportunity cost and too huge of a risk to try to time the market. That's why I suggest to always just dollar cost average in and sort of level out your buys into that respect, right? And so that's pretty much it for the NFT volume news. And so when we go and look at the next piece of news, we have the Bitcoin Ordinals NFT trading volume tanks 98% since May, according to DApp Radar, right? And so this is nothing new. For me, it makes absolute sense why the NFT trading volume is dropping a lot, because the interest in crypto is dropping a lot, right? But it's not just in crypto. All the markets are down, but they are up from I would say the lows of Q4 last year, right, in 2022. But it says here in August 17th report, DApp Radar highlighted its data showing that the total Bitcoin ordinal sales volume had decreased from peak levels of 452 million in May to roughly 3 million as of August 14th. In line with that drop, the number of transactions also declined by around 97%, right? And here you could see a chart where it shows the ordinals NFT performance, right? So you could see 1 million to then 1 million in February, and then to 13 million in March, and then it got to 14 million in April. Then in May is when it just went crazy bullish, and went to 452 million at the market highs. and then in June to 106 million, then in July to 35 million, and then in August back down to 3 million. So basically what that tells me is now is the time to start looking. If you are looking for opportunities within the Bitcoin ecosystem, this will not be the end of Bitcoin ordinals and NFTs. This is just the beginning. And so I think that there's a lot of possibility and room for growth here. Also, as you know, you have Alex Labs and Stacks and all these different sorts of things that are getting built on Bitcoin to help streamline the process to be able to purchase this stuff a lot more easier and a lot more cost effectively. But when you continue on with the article, it continues on and says here that DApp Radar described it as a grim scenario for the ordinals market, but it emphasized that more time is required to determine whether this is a temporary setback or a systematic problem of Bitcoin-based NFTs. This steep decline in both sales volumes and count within such a short period is alarming for Bitcoin ordinals. The diminishing sales count underscores the waning enthusiasm, or perhaps confidence in Bitcoin NFTs, the report states, right? And yeah, so that's pretty much it for the ordinals news. I think, again, like I said, they will come back to life, especially during the bull run. I just think it's going to go extremely crazy. So it might behoove of you to maybe look into it, be a little bit perspicacious, and just look into the ecosystem and see if there's buying opportunities for things that you've done your research on, and see if there's a potential opportunity for a massive growth. So let's go ahead and move on to the next piece of news. So we have PayPal to roll out cryptocurrencies hub for select users, right? So the cryptocurrencies hub is a key for PayPal to reinvent itself as a crypto inclusive platform. The service will allow for the sale and purchase of cryptocurrencies among other functionalities. So payments giant PayPal, which recently launched a dollar-backed stablecoin PYUSD, updated its terms and conditions to introduce Cryptocurrency Hub, a feature that allows users to hold and interact with Bitcoin and cryptocurrencies in their PayPal account. So before we continue, I just want to say PayPal, the issue I have with them with the PYUSD, right, is that they're using an old form of Ethereum code, which allows them to revert transactions whenever they need be, right? So it's not, just to let you guys know, if you think it is decentralized, it's not. There's nothing in crypto that's decentralized other than Bitcoin that's really fully decentralized. Bitcoin's the only really true decentralized ecosystem, right? And blockchain, right? The rest are kind of just leveraging tokenization models, but they're actual companies, which is what PayPal is doing, right? And again, I keep reiterating the point of it's great that they're adopting the Ethereum network, because then, and also other networks too as well, because if other payment solutions all across the globe do this, like say if they, just to simplify the example, just with Bitcoin, what you can see in the future is an ease in regards to payment transfers, because instead of just trying to find, if you had, I don't know, Bulgarian levs or Kenyan shillings, and you're trying to trade amongst each other, or trying to send value from one side of the globe to the other, and have these huge corporations, these middlemen taking cuts, what you could do is just transfer the money into, or swap the money into Bitcoin, and then send the Bitcoin over to the other payment provider that also offers Kenyan shillings, and then swap the Bitcoin back into Kenyan shillings. And that can serve as an interoperability solution when every other payment provider adopts the same network, right? In this simple example of just Bitcoin, right? So it's like I said, good in that regard, but again, it's not something I would use to store my money in. Again, I'm a big advocate for self-custody. I think it's the best and most secure way to store your value. But for other people, they may, not think that that's a great option. I just don't trust these companies, and they can freeze your account, revert transactions, all these different types of things that are just weird. But it's good, again, that PayPal is exposing themselves to crypto, which ultimately will give more exposure to more users, because they have a lot of users and these users will be more curious, and then the users will probably get more educated, and then through the education, they'll probably want to then get onboarded into the actual Web3 space in the decentralized finance and using these different sort of products and dApps and all these different types of things, right? So the article goes on to read, it says, the latest PayPal terms and conditions detail the prerequisites for crypto users interested in using the platform for cryptocurrencies. According to the company, the cryptocurrencies hub service will allow for the sale and purchase of crypto. In addition, it will facilitate the payment for purchase via PayPal using the money stored after the sale of cryptocurrencies. So it says here, the available features of the cryptocurrencies hub, as described in more detail below. Here are some things you can do with cryptocurrencies hubs. You can buy crypto assets, hold crypto assets, sell crypto assets, including to use proceeds to pay for purchases through PayPal account, convert between PYUSD and other crypto assets, send crypto assets, which is very important, and receive crypto assets, and view market information, educational content, which is, again, super. The last 3 points are super important, right? Because this is why Robinhood, I think they've upgraded now to where you can send and receive crypto, because what they realized is that customers wanted to participate in decentralized finance, because that's where, not only the money is, but that's where all the activity was happening on chain. And so they were losing clientele that way. And so now the companies have stopped doing this. We are issuing out Bitcoin, but you can't move it off of your exchange and hold it yourself, or we're issuing out Ethereum. You can't do that. It made absolutely no sense. And people were just starting to go elsewhere. They were maybe selling their crypto and going elsewhere, right? So the ability to send the crypto assets and receive crypto assets is a game changer. And I think it will be huge, especially moving forward. And I think other companies will follow suit. And also this provides, more access to more liquidity, because now you're just opening it up for, okay, say I'm a freelancer and someone doesn't have, USD, but they have, Russian rubles, and I did a job for them and they want to pay me, but maybe they can't send, USD to me. But what they can do is send Bitcoin to my PayPal account, and I can swap then the Bitcoin into USD, or I can, simply take the Bitcoin and just put it in self-custody, whichever or works for me. And so this is a very good solution in regards to that. And then also the another important point too as well is the fact that they're going to have educational content, right? This is also very important moving forward, because again, the more the public is informed, the better they'll be able to make decisions. And so when they're not informed, when they don't know exactly what this new digital asset is, they're going to be less inclined to want to use it and just stick to what they already know. And yeah, it's completely normal. So yeah, this is basically the PayPal Cryptos Hub. It says the cryptocurrencies will also be crucial to convert between PYUSD and other crypto assets. So, and PayPal also further clarified, any balance in your cryptocurrencies hub represents your ownership of the amount of each crypto asset shown. You will not hold the digital asset themselves in your crypto asset balance. However, not all PayPal users will get to explore the new feature, as the company will decide its access from person to person. Weird. Super weird. For starters, to be eligible for the cryptocurrencies hub, a PayPal user must have a personal PayPal account and a balance account in good standing. In addition, PayPal will also verify the required identifying information, which includes name, physical address, date of birth, and taxpayer identification number provided by the user, right? Because they want to make sure that you're tracked. So to make sure that you ensure that you pay your tax, because they will be sending this up to the IRS. And so basically that's how that's going to go. So just keep that in mind when you're thinking about, okay, should I put my money in there? Should I not put my money in there? It's something to consider. How's the accounting going to be so I can pay my tax? And depending on the tax situation of your jurisdiction that you're in, that's how that's going to go. And yeah, so they continue on to say you can only use your cryptocurrencies hub as part of your balance account by accessing it through your personal PayPal account if you were a Hawaiian citizen or Hawaiian resident. Sorry, not a Hawaiian citizen. If you're a Hawaiian resident, We will not allow you to establish a cryptocurrencies hub at this time. Goes on to read, the article says, upon rollout of the feature, cryptocurrency hub will be directly linked to the user's PayPal account and can be accessed using the existing credentials, right? The launch of PayPal USD divided the crypto community as contradicting speculations around its impact on crypto took center stage. While many envision PYUSD to fast track Ether's mainstream adoption, it could also spell trouble for decentralization and personal control of assets, warns the community. Several smart contract auditors highlighted that PYUSD smart contract contains freeze funds, which is again what I just previously mentioned, and wipe frozen funds function, which they claim are textbook examples of centralization, attack vectors, and Solidity contracts. So again, they're using the old version of Solidity that allows you to do those things. And so I'm not entirely sure about the long-term implications of that. It's quite risky. You need to understand the counterparty risk and, invest strategically. If you are going to put your money into a platform that you think you can trust, just know that there is a potential possibility for those assets to get frozen. So that's pretty much it in regards to that. And yeah, let's move on to the next piece of news. So we have crypto wallet provider Ledger to let users buy Bitcoin Ether through PayPal account, right? And again, so let's just continue on with this article and then I'll go ahead and tell you my thoughts. So the hardware wallet maker Ledger has partnered with payments giant PayPal to allow users to buy crypto in its Ledger Live app through their PayPal accounts. The companies announced on Wednesday. Ledger Live allows users to buy crypto with fiat currency and deposit tokens directly to the hardware wallet. With the integration of PayPal, users will now be able to link their PayPal account without any extra verification. We're combining the uncompromising security of Ledger with PayPal's leadership in protected payments technology to help facilitate a seamless platform for user crypto transactions. Ledger CEO Pascal Gauthier said in a statement, Ledger is committed to simplifying the world of crypto, and PayPal is committed to making the movement of money as simple, reliable, and affordable as possible. Ledger Live currently offers 4 cryptocurrencies in the United States, including Bitcoin, Ethereum, Bitcoin Cash, and Litecoin, right? The announcement marks another push from PayPal into crypto ecosystem. The payments giant announced the launch of its own stablecoin, blah, 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 right? So again, here's my thoughts, right? So these are some things that you need to understand when you're investing in crypto. So if you kind of want to move around a bit more, because at the end of the day, the value that you're transferring is always going to be tracked on the chain, right? But the point is to sort of try your best to protect your anonymity as much as possible for whatever reason. You don't want people snooping in how much money that you have, right? But the minute that you connect your Ledger Live to your PayPal account, your hardware wallet is now doxxed. And so that's up to you if you want your hardware wallet to be doxxed or not. But now they link that public address and all your public addresses on your Ledger to your PayPal account, right? And it's up to you if that's how you want to play this. But I don't know what the future is going to hold in regards to your particular jurisdiction and how they're going to see digital assets investing in cryptocurrency in the future. But for me, I just find other alternative means in regards to, buying crypto, right? It's up to you in regards to that. But again, it is a really good streamlined solution for especially people who are a little bit don't really care and just want to get the asset and have it in their custody. That's perfectly fine. But just know your entire everything you'll be KYC'd and doxxed, if you go through that particular way in how you want to buy cryptocurrency. And there's different ways in which you can buy. There's even ways to buy non-KYC Bitcoin too as well. But yeah, that's basically my thoughts on that. And so let's move on to the next piece of news. So we have Coinbase Ventures invest in Rocket Pool via RPL token purchase, right? So Coinbase continues to allocate capital to these projects, right? So Coinbase Ventures, the investment arm of crypto exchange giant Coinbase, made a strategic investment in the liquid staking protocol Rocket Pool. Rocket Pool lets individuals fund new validators and earn rewards, even if they hold less than a minimum amount needed to fund an Ethereum network validator node on their own, right? So Rocket Pool is essentially a way to basically streamline the process in case you don't have enough Ethereum to be able to, earn rewards. You can create a pool, right? If everyone putting money in to get to the amount of rewards that you need to then stake to a particular node, then the node receives then the rewards and then divvies out the rewards to then the stakers of that node who are uniformly doing it all together, right? And then they receive a percentage. And that's basically how that works. So continuing on, it says Coinbase invested in Rocket Pool by buying an undisclosed sum of RPL, the protocol's native token that currently trades at $28.35 with a market capitalization of $556 million. Rocket Pool is a leading liquid staking network on Ethereum, allowing users to stake ETH while retaining liquidity, right? With an emphasis on decentralization. The Rocket Pool network now consists of over 3,100 node operators with more than 780,000 ETH staked. All right. And so, yeah, that's pretty much it in regards to the Rocket Pool news and Coinbase news. And yeah, let's move on. So Coinbase officially launches in Canada. So this is an article as of August 14th, 2023. And it says, in our relentless pursuit of reshaping the global financial system and fostering economic empowerment, it says that Coinbase is unwavering in its commitment to unveiling innovative products that drive crypto adoption. While our journey towards transparency and compliance led us to become a publicly traded company in the United States, our vision transcends borders. Today, we proudly announce a pivotal milestone in our international expansion strategy, our official launch in Canada. And so Canada has been quite controversial when it comes to crypto. So it's kind of weird that they were able to get approved while they're I think Binance went away from Canada, if I'm not mistaken. So I'm trying to put the two and two together, and the only conclusion I can come up with is Binance has more Chinese ties and Coinbase has more Western United States ties. So the Westerners feel more comfortable with Coinbase being onboarded as opposed to Binance. And this is why they're trying to drive them out of these Western nations, right? And it says here, the article goes on to read, it says, why Canada, you ask? Our decision to delve into the dynamic Canadian crypto landscape was informed by a myriad of compelling factors. Ranked as the world's third most crypto-aware nation, Canada boasts an enthusiastic local tech ecosystem that, combined with its strides towards a robust regulatory framework, positions it as a potential global crypto economy leader. This sentiment is reinforced by the Ontario Securities Commission survey, indicating that 30% of Canadians are poised to venture into the world of crypto assets within the year. Interesting. And so it says, today we're making several exciting announcements together with local banking and payments partners that will help make crypto more accessible to millions of Canadians. First, we will expand our offerings in Canada with the completed rollout of Interact payment rails, empowering all Canadian Coinbase users to seamlessly deposit and withdraw funds to and from their Coinbase wallets through Interact e-transfers. Additionally, Canadian Coinbase users can also try Coinbase One with a complimentary 30-day trial featuring zero trading fees, boosted staking rewards, and priority support. And later this year, we will enable direct bank transfers over EFT for users to enable seamless deposits, withdrawals, and high value daily transaction limits. These are just the latest of several steps we've taken in recent months to grow in the Canadian market, right? And so it's very, very interesting. And yeah, so it says here, I just want to read this part right here. It says investing in Canada's thriving tech and developer ecosystem has a paramount to our strategy. Through Coinbase Ventures, we've nurtured local startups that contribute to innovation, entrepreneurship, and technological advancement in fields ranging from risk assessment to asset management, right? Notable Canadian portfolio partners include Dapper Labs, Minerva AI, Alexer, Horizon Blockchain Games, and Zapper, right? Interesting. So yeah, Coinbase continues to expand, and it's good for them to diversify too as well, seeing as the regulatory uncertainty in the States. And that way they have a hedge in regards to being able to have other locations in which they offer their services. And so they can move out to the US if they can't solve their regulatory issues, as they're already behind in regards to crypto innovation and things of this nature, right? So it's important to understand the landscape where things are going. And this is why, again, I always try to emphasize on the importance of having multiple exchanges in the first place, because you don't know which coins are going to be hyped up during the bull run and then what exchanges are going to be available to trade on. So it's important to diversify so you have multiple exchanges. Also, some exchanges maybe have they shut down during the bull run, right? Because there's just too much people. I hope that they've scaled, they have more scalability now, but there was last bull run, I remember there was too many exchanges having maintenance issues and not being able to take any more applicants, and they had to you had to wait a month before you could open it, and by that time you've already missed the money. So in preparation of that, it's important to make sure that you have multiple exchanges already ready to go in case you need to deploy more capital, but really the capital should already have been deployed during the bear market, right? So in the bull market, you're just kind of taking profits and maybe redistributing those profits into other assets that haven't quite started pumping yet, right? And so that's pretty much it for the Coinbase officially launches in Canada news. Moving on, we see Coinbase to suspend USDT trading for Canadian users. So let's go down here and let's see what it says. So it says cryptocurrency exchange Coinbase will suspend trading of the Tether DAI and Rise stablecoins for Canadian users beginning August 31st. In August 17 email notice to users, Coinbase said, we regularly monitor the assets on our exchange to ensure they meet our listing standards, and based on its review, trading of the aforementioned stablecoins will no longer be available to the Canadian users starting September. The exchange officially launched its Canadian subsidiary just days prior, although services were available to Canadian customers before then, and the Canadian users can still deposit and withdraw stablecoins after the deadline in statement exchange. And yeah, that's that for this news. And this is what I think about that, right? So this is how I'm going to look at it, right? USDT is Coinbase's biggest competitor, right? Coinbase is highly invested into USDC, right? Circle, which is again one of Coinbase's, it's part of Coinbase's umbrella of assets that they own, right? So USDC is a competitor to USDT and vice versa, right? So of course they're going to suspend USDT because they want the Canadians using USDC, which is their stable coin. And so that's why they didn't suspend the USDC trading, right? Which makes absolute sense because they want to they want all the market share. And then once they have majority market share, maybe then they'll reopen USDT and other stable coins, right? But the idea is that everyone onboards to your stable coin and you control majority of the market share for that particular jurisdiction. And that's all that's happening here. So anyways, move on to the next piece of news. And so here we can see Ethereum layer 2 base daily transactions pass Optimism and Arbitrum, right? So again, more on the Coinbase news. So Base jumped past the dominant Ethereum layer 2, Optimism rollup, networks, And so it says Base is also challenging the pair in new daily unique addresses and revenue generated, but Arbitrum and Optimism will dominate in terms of total value locked. Ethereum layer 2 network Base, incubated by the crypto exchange Coinbase, jumped past the dominant Optimism roll-up scaling solutions, Arbitrum and Optimism this week in terms of average daily transactions. Base's 7-day moving average daily transactions counted reached 610,000 on August 15th, compared to Optimism's 597,000 and Arbitrum's 576,000 before falling back. So yeah, I mean, it's interesting that Base is actually a real competitor to the other two layer 2 scaling solutions. What's kind of weird for me is why Polygon is not kind of in this article, because also layer 2 scaling is a solution for Ethereum too as well, but they don't really talk about it as well. And that's, for me, it's a little bit strange, but I mean, I guess. But yeah, this article, let me just continue the article. So it says here that Base saw daily active users surge to over 100,000 within a day of its public mainnet launch, with a whole bunch of scams too. That should formally mention that there was a lot of scams, a lot of rug pulls in the beginning. So a lot of people got wrecked and lost a lot of money. This is why I'm going to be putting out a video later on in regards to my bull run strategy and bear market strategy has been, and why I'm using this type of strategy to prepare for the bull run, and how I'm strategically placing my bets. I just wouldn't be investing in any of these coins that are just now popping up out of nowhere that haven't proven themselves, and it's the bear market. It's just very, very risky unless you know what you're doing. For me personally, I think the best bet right now is to dollar cost average into Bitcoin, wait for Bitcoin to pump, and then move it into altcoins, right? Strategically, I'm going to again give a clear-cut guideline of how I think is the best way in which to invest in the cryptocurrency market for this particular bull run. And I'll use different investment strategies depending on different types of liquidity that someone may have, whether that's 1K, 5K, 20K portfolio, or 100K portfolio, or $1 million portfolio, right? So anyways, the article goes on to read, says that the latest data for August 17th shows 24,000 new addresses generated for Base compared to 32,000 and 29,000 for Optimism and Arbitrum respectively. Data then from the same date shows Base generating daily value or revenue of 93,000 compared to Arbitrum's of 358,000 and Optimism's $231,000, right? And however, in terms of value locked, Arbitrum and Optimism continue to dominate with 4.2 billion and 1.4 billion in assets, respectively, compared to the newly launched Base of 244 million, right? And so on-chain summer, Base officially opened to the public on August 9th, featuring over 100 dApps and service providers, which most of them were scams. To be completely honest with you, anyways, the DeFi protocols Uniswap and SushiSwap and Compound were among the first to go live on the network. So if you guys aren't familiar with Uniswap, Compound, and SushiSwap, these are some of the most renowned and most have the highest, some of the highest brand recognition within the Ethereum ecosystem for DeFi. And what they're doing is just bridging out to other ecosystems to be able to, because it's all liquidity wars at the end of the day, right? So you're trying to extract as much liquidity for as many ecosystems as you possibly can, because an exchange without liquidity is worthless, right? And that's the entire point why they keep bridging to new networks, is to create that huge quantifiable network effect, right? And when you look at Uniswap, Uniswap is the leading DEX on Ethereum, right? So eventually, as these things get built out, whoever is able to command the most amount of liquidity and market share within the DEX space is going to be the winner in the long term for decentralized exchanges. And things will evolve in regards to just the simple swap that we've had the feature to more charts, more data, more Oracle implementations. Eventually you're probably going to have futures ingrained within these dexes, and all done through a smart contract, and liquidations and etceteras added on for the traders and so on. So that's how I think the DEX space will evolve over the course of time. But as of now, we're just at the humble beginning stages of DEXs, and right now you can mainly just swap and add liquidity and yield farm and things of that nature, right? So anyway, that concludes basically the base daily transactions past optimism and Arbitrum. I don't know if that's going to be a long-term thing, but it looks like Coinbase might be a very good sneaky network to really look at, to see where the opportunities lie, to where you can take advantage of them and potentially get high multiples in regards to the amount of money that you can make, from these early stage networks, right? So when there's a network that's highly hyped and is able to get this and command this much liquidity within a short period of time during a bear market, it would behoove you to maybe just look into it and see if there's any investment opportunities there for you to be able to capitalize on and get you a 50 to 100x to 200x, whatever. But let's move on to the next piece of news. And so we see Compound becomes latest DeFi protocol to go live on Base. So again, Compound, as previously stated, was another one of these DeFi protocols that was onboarded. And so if you guys don't know, lending protocols basically work as like this. So say I have ETH and someone wants ETH, I would deposit my ETH into Compound, and then Compound would then give me a percentage, right, for deploying my capital into their platform to provide liquidity. And as a reciprocating effect, someone would borrow against my ETH, right? This is a very simple example. And then they would pay a fee, right? Percentage fee for the borrowed amount. And that's basically how that would work. It's all peer-to-peer with all done through smart contracts, right? And that's the beautiful thing about these lending protocols. And that's basically how they work in a very simplified fashion, right? And yeah, so let's move on to the next piece of news. That's the Compound becomes latest DeFi protocol on Base news. And moving forward, we have the Sei mainnet is live. I don't know if it's Sei or Sia, SEI mainnet is live after testnet sees more than 7.5 million wallets created, right? And so the Sei Labs, the company behind Layer 1 blockchain Sei, has announced that its mainnet is now live after a successful testnet phase. The blockchain's native token Sei also went live today on exchanges such as Binance, Kraken, and Huobi, among others. The focus for Sei is to create a chain that offers users the ability to exchange assets easily, said the team behind the blockchain. Whether this means assets for social platforms, games, or NFTs, Sei is hoping to offer the smoothest experience, right? Most of Layer 1s look to solve a technical problem, whereas our mission is to solve the problem with exchanging assets easily. So that's what the co-founder said. And so, his name is Jeff Feng. And so there is a misconception that Sei is a decentralized finance focused chain, but we have more of a focus on social platforms, gaming, and carbon credits. And Sei goes on to say, Sei prides itself on its speed compared to other chains. According to the co-founder Jay Jog, Sei is 10x faster than Solana and can achieve transaction finality in as little as 250 milliseconds with a 100 millisecond buffer to ensure protocol stability. Transaction finality refers to the guarantee that the crypto transactions cannot be altered or reversed once completed. Sei has over 200 teams building on it and more than 7.5 million unique wallets, according to the press release, which added the SushiSwap's decentralized perpetual futures exchange will launch on the network as well. In May, Sei Labs raised $30 million across 2 funding rounds, including investors such as Jump Crypto, Multicoin Capital, and Flow Traders. Jump Crypto is a very highly credible venture capital firm. So when they're jumping into something like this, then it gives more eyeballs and more credibility to the actual project itself. And yeah, so I hope that Sei does well. I mean, I'm not so much into this hype of transaction finality, because at the end of the day, no blockchain at layer 1 can scale. It's just the reality. They keep pushing that narrative, but none of them at layer 1 can really scale. You know, they need to eventually have to go layer 2. And this is just the reality of blockchains, how they work. I mean, Bitcoin, Cardano, AVAX uses subnets, which is not really layer 2, but they kind of sort of create these sub networks, you know, to sort of streamline the computational power that way. But at the end of the day, you need to either create some kind of interoperability solution or scale to layer 2, like what Cosmos does, what AVAX does, what Polkadot does, or you need to scale to like a layer 2. But there's no real way that a layer 1 can just scale be scalable. Even Solana was slow during the bull run, and it was revered as one of the fastest blockchains, and they're claiming they have 10x more finality than Solana. I'm not entirely sure how they're doing that. I'm not entirely sure how they're staying decentralized, because Solana is not decentralized, and I'm sure Sei Network probably is going to have issues too as well in regards to that. But yes, anyways, that's the Sei Network news. So moving on to the next piece of news, we have Trump hurdles toward crypto whale status with Ethereum wallet worth up to $5 million. So former US President Donald Trump owns up to $5 million worth of Ether and has earned $4.9 million from NFT licensing fees, according to recent financial disclosures. Potential holdings are very close to the amount of crypto held by digital wallet receiving royalties from NFT collections. Former President Donald Trump is starting to look like something of a crypto whale, with both holdings of Ether and earnings from his branded NFTs growing by the minute. The entrepreneur turned politician owns up to $5 million worth of Ether in a wallet. And yeah, so an entry that details the potential size of the holding, specifically list income of 2.8 million. And here they have the screenshots and everything on that from doing the analysis on that. And it's very interesting for me because it says here too, let me just look at the royalties mirror Donald Trump's holdings. So in blah, 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 blah. Okay, yeah. So what I would say with this is it's interesting because Donald Trump was a proponent against Bitcoin and cryptocurrency for a while. But for him to be not into crypto and then still launch an NFT and still make money from it and still hold it in his wallet, what does that tell you about the clown world that we live in regards to the media telling you one thing and then doing another, right? So you should definitely start to use your own brain, have your own thoughts, make your own decisions based off the own data that you have collected, and then come up with your own conclusion based off of that data, right? And yeah, that's why it's important to do your own research and try to put the two and two together. But yeah, I just find this piece of news very interesting. Move on to the next piece of news. And so we have Tether makes strategic transition to meet community demands and foster innovation. So it says, at Tether, we hold a deep sense of responsibility towards maintaining a robust blockchain ecosystem for USDT and all other tokens we issue. To fulfill this commitment, we periodically assess the current transport layers, striving to strike a balance between maintainability, usage, statistics, and community interest. A key factor in deciding to bring USDT to a specific blockchain is the level of community interest. We carefully evaluate the effort required, encompassing security, customer support, compliance, and regulatory oversight to ensure the security, usability, and sustainability of chosen blockchain. If a blockchain lacks significant traction over an extended period of time and shows no signs of recovery in usage indicators, maintaining support becomes inefficient and may jeopardize security and oversight. Therefore, after careful consideration, Tether will embark on strategic transition, discontinuing support for Kusama, Bitcoin Cash, SLP, and Omni layer implementations. We understand the significance of this decision, particularly for Omni, as it has the first transport layer that Tether used in 2014. The Omni layer, built on top of Bitcoin, played a crucial role in Tether's early journey, and we acknowledge the contributions and innovations the team has made to the crypto landscape. However, over the years, Omni layer faced challenges due to lack of popular tokens and availability of USDT on other blockchains. This led many exchanges to favor alternative transport layers, leading to a decline in USDT usage on Bitcoin. Using the Omni layer as a principled organization, we must remain consistent and transparent and adhere to the open processes in which, even if it entails difficult choices, right? So very, very interesting with this article. We won't go through all of it here, but they're basically the summing up this whole article, what they're basically saying is that, you know, Kusama, Bitcoin Cash, and Omni, Bitcoin Cash SLP and Omni have not had so much traction in regards to generating more users, generating more transactional volume, generating more hype, generating better marketing, generating more people talking about them. And so Tether doesn't feel the need to, you know, launch on these chains, right? Because they see it as, okay, why am I launching on a chain that, you know, it's dying down in regards to users, in regards to people talking about it in the crypto space, in regards to innovation, in regards to projects being built on top of it. Because at the end of the day, Tether's point is that they want to make money. And so if there's not enough users, it's not worth the hassle for the upkeep of the maintenance to be able to facilitate the Tether coin on these particular networks, right? And so they're closing down shop for these particular networks. And Kusama is the one that I'm really, really shocked about the most, because that was the one that was getting so much hype during the bull run. So much hype. I remember Kusama was huge and everyone was saying like, oh, it's like, you know, Kusama was like the Robin to Polkadot, you know, at the time. And everyone was talking about it and bigging it up. And for them to make this claim about Kusama not being that adequate currently right now for their particular needs and their sort of what they're looking to do in regards to that in the long term, it means a lot, you know, it means a lot. But yeah, this is the Tether continues to shift and move within the ecosystem of crypto in a strategic fashion news. So let's move on to the next piece of news. And so we have mining one Bitcoin in Lebanon is 783x cheaper than in Italy, right? And so this is a very interesting piece of news. It says a significant worldwide contrast exists in household electricity expenses for individual Bitcoin miners. While producing one Bitcoin in Italy cost 208,560. In Lebanon, it's roughly 783 times cheaper, according to a recent report. And it goes on to say, it says, published in August 17th, the report from CoinGecko revealed that only 65 countries are profitable for solo Bitcoin miners, based solely on household electricity cost. Among these, 34 countries are in Asia, while only 5 in Europe, right? And however, solo Bitcoin miners find themselves at odds with worldwide average of household electricity cost, right? It says the average household electricity cost to mine one Bitcoin is $46,294, which is 35% higher than the average daily cost or daily price of Bitcoin in July 2023, right? The report identified Italy as the costliest country for household Bitcoin mining at $286,566 per Bitcoin. At the time of this publication, this suggests the cost of mining one Bitcoin in Italy is equivalent to value of approximately 8 Bitcoin. This was followed by Austria at $184,352 and Belgium at $172,382, right? And so when you look at the chart here, it has basically some of the most costliest countries to mine Bitcoin, and of them in this particular order, you have Italy at number 1, then Austria, then Belgium, Denmark, Germany, Ireland, Lithuania, Netherlands, UK, and Cayman Islands. But this is also, again, it depends on a lot of things, right? It depends on, if you're using solar energy or not. And it also depends on what city that you're in within that country, because like electrical costs change depending on what city you're in too as well. So there are a lot of determining factors, but this is just kind of the mean, the average. And it says that meanwhile, household electricity rates allow individual miners to generate one Bitcoin for just $266. Based on this data, this is approximately 783 times cheaper than it is Italy. It says Iran followed with a production cost of $532 per Bitcoin dollars, right? However, despite Iran legalizing Bitcoin mining in 2019, the country has since banned legal operations on the several occasions, citing stress on energy grids during wintertime, right? On January 4th, Cointelegraph reported that approximately 150,000 pieces of crypto mining equipment were seized by Iran's Organization for Collection and Sale of State-Owned Property. On August 19th, Binance CEO CZ posted a screenshot of this report's data on X, formerly Twitter, questioning his 8.6 million followers why individuals in these countries with low electricity wouldn't mine Bitcoin, right? And it goes on to show the top 10 cheapest countries in the world to mine Bitcoin in a particular order. So you have Lebanon first at $266. Then number 2 is Iran at $532. Number 3 is Syria at $1,330. Number 4 is Ethiopia at $1,596. Number 5 is Sudan at $2,128. 6 is Libya at $2,660. 7 is Kyrgyzstan at $2,660. Number 8 is Angola at $3,724. 9 is Zimbabwe at $3,990. And 10 is Bhutan with $4,256, right? Now, here's my thing, right? Let me see if I can try to break this down how I look at this, right? So if I'm in Lebanon, I can basically set up a crypto mining facility, right? And the opportunity cost is quite good because of the low electricity cost. And I can essentially transfer my energy into Bitcoin and get rewarded in Bitcoin, and that one Bitcoin would suffice me in that particular area for a long duration of time. And so it's optimizing my economic energy in a sense, it's just very, very interesting. I think these countries should take advantage of this, because of the low electricity cost. And I think it's optimal, especially if you're able to get the mining equipment set up it would be a really good investment, to make within these areas that have just low electricity costs. And yeah, it's very, very interesting. But yeah, let's go ahead. Let's move on to the next piece of news. Almost done, guys. We got two more and then we're done. So here we have Terra website compromised. Developers warn against phishing scam, right? So it says layer 1 blockchain Terra. If you guys don't know, familiar with Terra, Terra was one of the biggest blockchains in the entire world, and it got up to, I think, 60 billion in market capitalization, and it went to zero because of their mint and burn mechanism. It just ended up not working out. It was one of these mint and burn stablecoin experiments, and it didn't work. And yeah, so it ended up collapsing. I was also a victim of Terra too as well. Luckily for me, I didn't have my entire portfolio in Terra, but I did lose some money there. But you live and learn, right, from that. And it looks like they're trying to still continue to, I don't know if there's still a little bit of development going on in Terra. From what I heard, I guess there is. And there's sort of a lot of the projects actually went and ported over to the Cosmos ecosystem and continue building over there. But anyways, this article goes on to read, says layer 1 blockchain Terra said its website was compromised over the weekend by hackers that are using access to attempt phishing attacks on visitors who are prompted to connect their online or hardware wallets. Avoid potential phishing scams. Please continue to avoid interacting with sites with terra.money domain until we post another update confirming full access. And it says a phishing attack in this case is where hackers disguise a website or a web page to insert malicious code into users' wallets. When a user connects a wallet to a compromised web page, they will sign a digital signature that gives the hacker access to assets in that wallet. It is unclear how much has been stolen. The Terra blockchain is best known for being at the center of 2022's crypto downturn following the collapse, again, like I just briefly stated, of the augmented stablecoin Luna. Well, actually, it's not. It was UST. So this article is actually wrong. It's not the native algorithmic stablecoin. The article says Luna, but it's actually UST was a stablecoin. The implosion wiped $60 billion in value out of the crypto market. And yeah, that was the story of Terra. It was a wild ride. Made me a bunch of money, lost me a bunch of money. But in the end, I learned a lot from this particular ecosystem. And again, I'm going to be breaking down how to optimize your profits, in the next bull run, and how to spot when you should get out, you should take profits, and you should move on. But phishing is a big, huge point of discussion in regards to how hackers are able to find nuanced ways to get into and brute force into these protocols and, disguise these websites. I think it was even Mark Cuban who logged into the wrong website and lost like $800 million or $800,000, something like that. So again, cybersecurity is super important moving forward. And another way I think you could still protect yourself, even if you were to get phished and they were able to implant the malicious code into your wallet, I don't think they can still take the money out of the wallet if you have a ledger wallet or a hardware wallet as a two-factor authentication, because I still think they need your hardware device to move the funds out regardless. But if you don't have a hardware device, then I think you just take the L in that particular situation, right? So anyways, something to keep in mind. And for the last piece of news, we have the FBI says North Korean hackers may try to sell 40 million of Bitcoin, right? So it says here the FBI released 6 wallets linked to North Korean hackers, Lazarus Group and APT38. And so North Korea hackers may attempt to cash out stolen Bitcoin worth more than 40 million, according to the FBI said in a statement on Tuesday. It says the North Korean-based Lazarus Group and APT38 were reportedly behind the scenes of crypto hacks earlier this year, including 60 million theft from payment processor Alphapo and 100 million exploit of Atomic Wallet. Yeah, the Atomic Wallet one was huge. I know a lot of people that lost a lot of money from that. So yeah, in January, the FBI named the two groups as being behind the last year's Horizon Bridge hack, which resulted in the loss of $100 million. 6 wallets containing a total of 1,580 Bitcoin, valued at the current around the price of $41 million, were identified as connected to hacker groups. The FBI warned the currency companies against interacting with those wallets. And yeah, so again, hacking is very, very huge and a very, very big problem in regards to not just the crypto space, but just in general, in regards to there's a lot of systems administrations issues, and companies and crypto projects don't have the right infrastructure, right? The right network architecture to be able to withstand these sorts of hacks. So that's why it's important for them to reach out to these, cybersecurity specialists. And that's why, again, I'm so adamant about cybersecurity, because I want to get in to help with, smart contract auditing and, to prevent these hacks from happening in the crypto space, because it kind of looks bad in the mainstream, right? That when these hacks do happen, people look at this space as not a space that is worth investing in, right? When they can't even get the security right. And it scares a lot of people, and it scares a lot of potential investors from the market. So it's important for us to get this sorted as a unit, as a community in the Web3 space. But guys, this concludes this podcast, man. I hope you guys enjoyed this one, man. Stay tuned for the next one. I have a special guest coming on, man. And peace.